Hi guys, Christian here from the MCI Trading Academy, bringing you a fresh stock market analysis outlook for the week ahead. And guys, what a week we've had last week. And it felt like for some of you out there, the world was going to end because of the sharp sell-off that we've had in the stock market. Now guys, we've been preparing you for this all along, especially over the last couple of weeks. We've been signaling that a crash was going to come in every single outlook that we've done over the last couple of weeks. So you should have been fully prepared for this, and hopefully you made out some really good gains out there. Guys, we have a lot of crucial things to go through in today's video, starting with the outcome of the Fed decision last week, the intervention of Japan to prop up the yen, the fall of the British pound. As you guys may be aware, the British pound has fallen to a record low against the US dollar following a number of policy announcements that were introduced by the new UK government last week. And guys, as a bonus, I have someone that I've been following for a very long time, someone that has predicted the crash, everything that's happened this year, the crash, the rally, and the crash that happened recently now as well. They have a very important announcement about the stock market that they predict is going to happen in the next couple of weeks, guys. So make sure you watch until the end, because there's some crucial things that they are predicting, and if they are to happen, then we have to be prepared to take advantage of those. So make sure you watch until the end, guys. This is going to be very, very big. And just before I start, guys, if you are new to the channel, please consider subscribing. We do bring out a new stock market analysis outlook every single Monday, and can I just say we've been 100% spot on with the analysis that we've done in each outlook over the last couple of weeks. So it does help out to be subscribed. If you do enjoy today's video, please don't forget to give us a like. It does help us a lot, guys. And if you are new to trading or you've been trading for a while and you are struggling with being profitable or consistently profitable, then please do consider our trading courses. We do offer one-to-one mentorship courses. You can find out more about them at mcitradingacademy.co.uk. And guys, let's just start off by looking at the outcome of the Fed decision last week, of the Fed meeting last week. And as you guys are aware, the Fed raised interest rates by 0.75 basis points, and they reinforced their commitment to keep interest rates higher for longer. And they even said that they are happy to risk a recession for them to get there. In other words, they are prepared to do anything it takes to bring inflation down, even if a lot of people have to suffer in the process, which obviously is very negative. It's positive for the US dollar, it's negative for the stock market. And what happened with the stock market following the Fed decision? Well, if we look at the daily chart of the S&P 500, we can see here that following the Fed decision, we have had a big drop, which is to be expected, and we've been preparing you for this all along, so I hope you did take advantage of this. Now I wanted to show you this. Okay, last week, guys, we had a massive drop, and sentiment was at record low. If we take a look at the fear and greed index, okay, which is this one up here, it went down as low as 20. We entered extreme fear, guys. And remember what we talk about in our course: when we get to extreme fear, when sentiment is very, very negative, perhaps it's time to go back in and be greedy and start buying up the stock market. Now, I'm not suggesting that we should start doing that blindly, but we can look out for key areas that could potentially give us the bounce. And this is something that we'll be discussing in today's video. We should remember the quote by Warren Buffett, which says that we should be fearful when others are greedy, and we should be greedy when others are fearful. And that sounds about the time now. Now guys, just to reiterate, we finished the day, the fear and greed index finished closed at 24 on Friday, and that was due to a short covering that took place in the last hour of trading on Friday evening. Now what happened then is that a huge number of people started buying puts going into the weekend, just to make sure that they cover themselves up for any potential negative news that may occur over the weekend. And what Wall Street did, they started beating up the market in the last hour to make sure that those puts will never be paid out. And you can see that in the VIX as well, with the VIX dropping like a rock in the last hour of trading. So very clever by Wall Street what they've done there. Now guys, let's discuss what happened to the Japanese yen following the central bank intervention last week. As you guys may be aware, the Japanese yen has fallen to record lows against the US dollar over in the last couple of weeks and months, following you can say bad policies in the Japanese central bank to keep interest rates low. Now what the Japanese central bank did last Thursday, they've intervened in the currency. They haven't done that since 1998. Now what they've started doing at 9 o'clock UK time is they started selling US dollars and they started buying Japanese yen at record highs. Now as they've started doing that, you can see that here, as they've started doing it, the Japanese USD chart, the Japanese yen started getting a bit higher. It started moving higher and higher and higher. Now, this intervention was not successful. Why? Because if it would have been successful, we would have been expecting this to keep going higher, not push back down. And it looks like it wants to push back down to where the intervention has occurred, which suggests that more interventions will occur over the next coming weeks. Now, the last time they've done an intervention, guys, was in 1998, was down here. After they've done that, you can see over the next couple of months that the Japanese yen did get a bit higher. Okay, so we did get a push higher over the next couple of months, but I think they intervened a couple of times here as well. So it suggests that they may do so here as well over the next couple of weeks. So be aware of that. There is nothing fundamental about this. There's nothing technical about this pair. It's all fundamental, because when the central bank intervenes, they will just, anything technical, it just wouldn't work, guys. So just be aware of this. That's what happened last week with the Japanese yen. And just to follow up on this, the same happened, or the same, similar happened to the GBP USD, where the sterling has fallen to record lows against the US dollar following a number of tax cuts introduced by the UK government, where they suggested, where they stated that they will fund those tax cuts by borrowing money, and that devalues the pound. So guys, this is crucial. This is going to be crucial. This is going to be the one to watch out for this week, guys. Make sure you put this in your notes, in your diaries, to watch out for any news relating to this. Because in order for the pound to get any bid this week, for the pound to get stronger and higher this week, is if the Bank of England goes in, schedules an emergency meeting, and they increase interest rates. That's the only way to save the pound. If they don't come out and schedule an emergency meeting this week, and they don't raise the interest rates, this will go to parity or even lower than that. So guys, make sure you watch out for this week. I will assume that at any point this week you hear about an emergency meeting in the Bank of England, the pound will just go crazy higher. Okay, so if we look at the GBP USD chart, you can see that it hasn't been so low. It's never been this low ever in history. You can see the last time it's been was in 1984, and it looks like we took out that low. So guys, this is historical times that we are in at the moment. So if the pound is to be saved, it has to be done this week or perhaps next week. Otherwise, that's it for the pound. No one has any trust in the government. No one has any trust in the country. So if that's not going to be saved this week, that's it, guys. Watch out for this, because if they don't come up and say that, I'll assume that everyone will start selling the pound, and this will go to new lows, and who knows how low it can get. Okay, so watch out for that, guys. Be prepared. In terms of technical, if we are to analyze this from a technical point of view, well, we are at the last point of no return. We could say that if the pound, I mean, if it's going to be saved, it has to be done here. We have the monthly IC, and it's very crucial how we are going to close this month. If we close below the IC, then I will assume that we'll be going lower, and if we close within the IC or perhaps higher, then perhaps we can get a bit higher, and we can push out and perhaps take those highs. Those are very clean highs over here, guys, so perhaps we'll go and target those over the next couple of months, year or so, depending on the policies that we have here in the UK. Moving on, guys, let's start. And I just wanted to show you this quote over here that I've showed you a couple of weeks ago, which is this one here. So this was a statement from the JP Morgan desk, and I've showed you this a couple of weeks ago. It basically stated that we received a number of questions about whether we have seen panic selling. We have not. We still await one of those flash days where you have VIX spike to the 40-50 range, the market falls in around 4%, and you begin getting calls from relatives about which assets to sell. Now, that was a couple of weeks ago, and they were right. We did not see capitulation, we did not see panic selling, and the stock market fell a lot more since that day. So if we are to look where the VIX is at the moment, guys, the VIX is going into it's above 30. We are at 32 on the VIX, which suggests that if we go above 35, capitulation will be coming. We'll start seeing news, the social media news channel going crazy about the market crash that can be perhaps worse than in 2008. So guys, watch out for the VIX this week. I would assume that the VIX, if we go above 35, that is not the time to be selling, guys. That is the time to look for buying opportunities. Remember, when everyone is fearful, we have to be greedy. So I would assume that if we go above 35 at any point this week or next week, the fear and greed index will be in around 10 or below, and that is the time when, guys, you should be looking for buying opportunities. So make sure you monitor this week and next week. Now let me point your attention to this chart over here. Now this is the SPY. This is the real chart of the S&P 500, and this is a daily chart. And guys, I showed you this a couple of weeks ago, where we were up here, and I mentioned to you that we had about 7 or so gaps to the downside. And guess what? We filled all those gaps, and now we have 1, 2, 3, 4, 5, 6, 7, 8 gaps to the upside. So we have literally no gaps left from this move from the June bottom. We have no gaps to the downside. We have a lot of gaps to the upside now that are due to be filled. So I will expect the market to bottom either not this week. I'll expect it to bottom at some point next week. And then we should see some of those gaps being filled, and that will work out pretty well with what I'm about to tell you at the end about what the person said. Remember the bonus quote at the end. In terms of economic news, guys, we don't have any big news announcement this week. We have a couple of Fed members speak this week. Okay, the Fed chair Jerome Powell speak. He speaks quite a few times this week, so there's something to watch out for. I don't expect him to say anything crucial, but just be aware when he speaks. There may be some sort of volatility. There's no crucial news announcement, so it's just pure technical this week, which will bode on well with what we are about to go through now. In terms of the technical analysis of the charts, let's start by looking at the UK 100. And guys, here we predicted this. We said last week that we were in a narrowing channel and we were expecting the narrowing channel to break either above or below. And guess what? It broke below, and it looks like it hasn't recovered since. You can see that we had a big move on Friday. The pound fell on Friday, so did the UK 100 in this. Now, in terms of where are we planning to go this week, well, I was looking at this 4-hour IC here, which seemed to have given up, and now we got one last 4-hour IC where I will expect the price to come, consolidate, and perhaps we get a retest of this narrowing channel this week. If we do get so, then there will be a nice opportunity to sell into from here into new lows, guys. So watch out for that this week. Okay, so this 4-hour IC, we can take this off. Why? Because this obviously hasn't materialized. We got 2 more hours left, so let's keep that in here. Maybe there was just a stop loss hunt and it goes higher from here, but I wouldn't expect to do so. Let's have a look and see. Next, we got the DAX. Now the DAX, on the DAX chart here, we got a system error here. Okay, this week here. But if we start with the weekly chart, guys, we've broken below to a new low. We've taken out the June lows, so the June lows and the July lows. So we are going full capitulation here. Okay, there's a lot of negative news in Europe at the moment, so I wouldn't expect to see this getting a bit up at any point in the near future. Now, where are we aiming for this? We have a 1-week IC in around 11,000, where we are looking for going long, buying opportunities long term. In terms of where are we looking at for this week, we've had a break of the narrowing channel on a daily. So what I'm looking for this week is I'm looking for price to come into this 1-hour IC at some point this week, where I'm looking to take shorts from. That's pretty much what we're looking at. We got indicators, we're getting a lot of positive divergences here. Okay, we're quite oversold, so I will expect to see a bounce at some point this week to take out some sellers. Okay, and then I'm looking to place sell positions probably around this point here, either here. I know there's a lot of liquidity that is resting above here. Okay, and there's a nice IC here that I'm waiting for, so I wouldn't be surprised if price makes it all the way up there, but it's with all the negative sentiment, I don't think it's going to happen this week. But let's have a look and see. Okay, we have to monitor the charts and see. Next, we've got the US 30. Now on the US 30 is the same situation. We've taken out the June lows. That was a big support level, guys, and that's been lost. Okay, so there's a lot of negative sentiment here. Now, one thing to note here, you can see that the 200 weekly EMA that's acted as nice support in June, we've actually closed below that. And this week is going to be crucial. Are we going to see some follow through where we sell off this week? Or are we going to see a bounce up and close above the 200 weekly EMA, where then we can use that as a sellable opportunity to target the weekly IC here. So we're looking at in around 28.5, where we would like the market to bottom in for the year and perhaps get a nice bid up into the end of the year. That will be the target for this year, guys. If we look at the monthly chart, we are right at the 50 EMA here, which has been acting as a nice support here. So it will be crucial to see where do we close this month. We got a couple of days left. That will be crucial to see. In terms of the short term, I'm looking for price to either to push up at some point. Perhaps we see a sell as the US opens on Monday, and then we start getting a bid up for the rest of the week, where we got some liquidity to be cleared here. So we'll expect to come either here or into this IC here, where we can look to short and target the weekly IC as take profit. Next, we get the US 100, the Nasdaq. And the Nasdaq is in a similar situation here. We just about lost the 200 weekly EMA, guys, and this was crucial support. Now, in terms of what are we looking out for the next week and into the end of the year, you can see here the 50 EMA has been strong support here over the last, well, it was great support in March of 2020, in June of 2022, and now it looks like it wants to go and break this. So it's going to be crucial to see how this will close out. In terms of targets, well, I'm looking for price to retrace a little bit this week into this 4-hour IC here, or perhaps this 4-hour IC here. They will fill up this IPA and they will come into this 4-hour IC, and I'm looking to short and target about 11,000 as an initial place where perhaps I'm looking for longs. I think they will use this week to improve the sentiment a little bit and then capitulate next week. That's what I have in mind. Okay, but we'll have to wait and see. In terms of US 500, guys, this is a crucial level, and obviously this is the market to watch. We use the S&P 500 as a lead indicator for the stock market, for all the other indices. And if you look at this, you can see that we've closed just above the 200 weekly EMA, which is crucial. So in order for this week to work, guys, I will expect perhaps to close above it for this week and then crash next week, where into perhaps the 3,500 or so, and I will use that as the capitulation phase where people will start buying it from. So use the S&P 500 as a lead indicator for when to start buying, guys. Okay, now if we do crash this week, then that's even better. Okay, but I don't think it will happen this week. It's just too much negative sentiment at the moment, and it's just for, if the stock market gets a bit up, perhaps they will suck in more buyers and then they can crash it down the week after. That's my thought, but they can do it this week as well. All they have to do this week is take out the June lows, which they may happen perhaps as the US market opens today. They will take out the June lows, they will take out the liquidity that is resting below here, and then they can move up. And what a nice scenario here would be for price to take out the liquidity here and then go up into this 2-hour IC here. So the way it would work is the market will push up above the upper expected move for the week at some point this week, consolidate here, and we can where we can take a nice sell position, and the market can close where within the expected moves. That would be an ideal scenario, guys, but let's see what the price wants to do. They may want to crash it on Monday, right? They can do that. I highly doubt it, but we have to wait and see, just because of the number of puts that were opened late on Friday, guys. I think that would be a catalyst for not crashing it on Monday, but we have to wait and see. Now, as I said, I've got a bonus for you guys. So this person here, okay, that I've been following for a long time, and whatever they said actually happened this year. Now, what they said on Friday was this. They said that the risk to reward is growing poor for shorts. Multiple negative bread days combined with poor sentiment and upcoming cyclical turns suggest trading lows are near. My own time targets focus on October 4th to October 7th as the market bottom. for the year, guys. So watch out for the first week of October. They expect the market bottom to be in the first week of October, which will bode in well with my theory, which says that we bounce this week, we crash next week, and that's it. We crash next week. We have capitulation where VIX goes to above 35 to 40, perhaps 50. The stock market, the US 500 goes to around 3,500, and that's where we bottom. So guys, there will be some crucial opportunities for the stock market in the next couple of weeks, perhaps this week or next week. So guys, be prepared. There will be long-term opportunities until the end of the year, because as comes next year, I expect to see more downfall to come. I will have to wait and see. Now let's look at the DXY, the dollar index. And guys, we've been predicted this. I mean, as a long-term target, we discussed that we wanted the dollar index to come to 115. Where are we? 113.6, and we went as high as 114.4. We are close to our final targets, guys, which will suggest a bottom in the stock market, guys. So just watch this week. I will expect to see a bounce at some point, to see a move lower at some point this week, and then see the high next week, and that should be it for the US dollar. And we have to monitor and see how this develops, but if that happens, guys, then you can assume that we can have a nice relief rally in the stock market going into the end of the year. Same, we've got gold, and gold is sitting, guys, at a critical level. If we look here, we've got a nice IC here, okay, right in here, guys, that the price seems to be waiting and consolidating above. So if gold doesn't lose this level, I mentioned before that if we were to lose this level here, then we'll be dropping down all the way to 1580 or so. Now this level seems to be holding, and as the DXY pulls down a little, I do expect gold to get a bounce up. Get a bounce up to where? Well, I will expect first to clear the liquidity that is sitting above those levels here, so just above the 1700 or so. Then as the dollar pushes up higher, then I expect gold to come in lower. Okay, so there's something to watch out, guys. Just a short-term bounce here, and then perhaps we may see more downside in gold. Lastly, guys, let's talk about Bitcoin. And Bitcoin seems to be consolidating, waiting for a big move to come. Where will that big move be? Looks like, as it stands now, that the move will be to the downside. If we do get capitulation in the stock market in the next couple of days, weeks, then I expect Bitcoin to also be affected, guys. And if we do lose the 17.5 level, then we'll be going all the way down to 12.5, where we expect it to be our end target, and that should be the place where we can go in and scale in with buy positions. That's it from me this week, guys. Thank you very much for watching, and please be careful out there, guys. There's a lot of negative news, there's a lot of negative sentiment out there that will make you not want to buy when the opportunity arises. So make sure that you control your emotions, you do your analysis correctly, and you are prepared to buy so when the opportunity arises, guys. Please, if you haven't done so, please give us a like and subscribe to the channel if you haven't done so. And guys, please be careful out there and have a great trading week.